Hello and welcome to this May 24th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by stochastics.com, simply the web's best financial charts. Today we are featuring Sears Holding, ticker symbol SHLD. This is over a $10 billion market cap consumer discretionary company. Taking a look at their chart technically, you can see the stock actually was a very nice performer, doubling really from the early part of October when it was trading just a little over 60, ran all the way up at the early part of May 2010 to 125, so effectively a pretty nice double in about 7 or 8 months. Since then though, Sears has run into some difficulties, as has the overall market. The first move down here went from about 126 down to 103, and then we went into a bear flag where we saw the flag on the way back up to about 115 and then pulled back down. We lost the 103 level, so this 126 to 103 area is about a 20% decline. So when you lose 103, you look for a possible 20% decline from there, which was down to 83. And you can see on the low on Friday we made the measurement, falling all the way back down to 83.90 before reversing back up. Now the key here was on this reversal we held on to long-term support, which came in at around $86. We also had the 200-day moving average at 86.28, and even tried to hold on to this reaction low after the gap up in January. You can see we gapped up from about $89, came all the way back down, filled this gap back to 89, close to the 50-day moving average, and then started making our move back up. So Friday's close at about 88.61 came back up very close to this reaction low off of the gap up in January. So there's a lot of support area that comes in from about 80, right around the $86 level up to about 89, and that's the range we finished in on Sears Holding. Now from a risk-reward perspective, it seems like it's a pretty good candidate here on the long side, because it has fallen so much so quickly and it's back down near key support levels. Our oscillators show that we're very oversold. RSI right now down 27 and change, stochastics at 7, so that combination would suggest that Sears is ready for a little bit of a bounce. But looking at the MACD, you can see that's pointing straight down, very weak. So I think any kind of a move to the upside is probably going to be limited. So watch the tail that went down to 83.90 for those who really want to minimize risk. That 83.90 area should hold on an intraday basis. Sears has no business going back down below that level. On a closing basis, maybe around the $85.50 to $86 area. You could look at to the top side. What I'd be looking for first is you've got the bottom of this gap resistance that'll come in at about 95 and a quarter. That's going to be a key area to try to get through. If you do, there's really nothing until you get up to about 99.50, and then ultimately the breakdown up here around 103. So those are the areas that I'd be looking at to potentially take profits on a bounce. But keep in mind, with the MACD looking this weak, normally if you make a move back up, if you get to the 20-day moving average, that's usually stretching it. So I don't know that I would be expecting any more out of the stock, at least in the near term, until it shows us something else. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.